And you are welcome back to our YouTube channel. Today is Wednesday, and this happens to be the last week in the month of June. And we are actually going live again today to share some trading ideas, some trading concepts. The market has actually been very, very beautiful in the last 2 weeks. And I say beautiful because you will see a whole lot of movements that are seemingly uncalled for, right? And a person that really does not understand why the market does what it does, won't be able to tell why the market is moving in a very radical way. Mostly the pairs that are associated with USD and other pairs that are reserve pairs and safe havens like gold, you know, I know that you get some kind of very radical movements in the markets in the last 2 weeks, and we know it is because of everything that has been happening in the Middle East. We saw how oil price yesterday has actually ran down, 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 and we know why that is actually happening. So the oil price yesterday gave a very, very big shift to the downside, and we saw how that the XY also has actually lost some momentum in the higher time frame. Yeah, it's about 4 hours. So the dollar index actually lost some momentum, and we see other commodity pairs beginning to gain momentum as the Middle East begins to gain some level of stability, right? So the whole market has just been rocked up and down in the last 2 weeks. And for those that really don't understand why market does what it does, it would have been a very big disadvantage for them, because this would have led to some kind of unexpected scenarios playing out in the market. But as a result of this, I decided to come again and call us to one single truth about the market. The market is actually not random, right? Everything the market does, it does with a purpose. And you can actually find what the market is going to do next using some price action theories, right? Because, I keep telling my students that, see, they are just a set of persons that run the everyday activities of the market. And now you're talking about the institutions, the bank, the hedge funds, and all these people that are alike. They run the everyday activities, the everyday movement of price in the market. And these people are the same people. That is to say, they do the same thing over time. They repeat the same trick. They repeat the same strategy. They repeat the same movement over time because they are human beings, right? Human beings cannot just be totally random doing something new every time. Human beings like routines. So if the central bank comes to the market, it comes with a particular routine and it does just one particular thing over and over and over again. And that brings us back to the retail traders. If retail traders comes to the market, they see one particular thing and they repeat one particular thing over and over again. So it keeps the market like something that's between two polarized players, right? Two distinct players, those that are the retailers, those that are the smart money, right? So the retailers and the smart money, each and every one of them repeating the same thing over and over again. But this repetition may appear in diverse forms in the charts, different ways, different prices, different movements, different momentums, and everything. But as a smart money trader as I am, I've actually trained myself to come to the chart and look for what the institutions are doing, because I can always track their footmark because they don't do anything different. They just repeat the same thing over and over again through different scenarios, right? So I think in this kind of a situation where we had the market being rocked in the last 2 weeks, having to understand the way that happens, having to understand the way the smart money, the institutions, and every other person, every other big players out there that moves the market, having to understand the way they do those stuff, will really, really help us, understand what is happening in the market, how to position ourselves to, make profit out of what is actually happening. So today, I decided to, as a result of this, share a very big aspect of my mentorship, and just to help those that are actually struggling with trading, and also to see how we can build each other and get profitable in the forex trading market. Okay, so as a result of that, today I'm going to be sharing something very crucial. I'm going to be sharing something very, very crucial. I call this the new paradigm, right? The new paradigm. And the new paradigm, it has to do with structure mapping, right? When I teach this, I tend to bring people's minds out of this, what I call it, an oblivion or a quagmire, or that particular status that makes you feel like the market is random. I bring it to a point where the market does, I show you what the market does again and again and again. So when you come to the market, when you come to the chart, you actually know where to start from. You actually know where to pick the market from. You actually find the reference point, and you start with your reference, and you know where price is actually heading to, and you can actually follow price there. So follow me in the next few minutes while I do this. And if you have not liked our previous videos, I urge you to go back there, see what I've been teaching in the past. In the last class, I talked about order blocks and how smart money uses other blocks, or how smart money traders should actually use other blocks, why other blocks are formed. Then I've also talked about certain other stuff in the past, but today I'm going to be teaching you how to mark structure as a smart money trader. So without wasting time, let's dive into it. So the new paradigm revolves around structure mapping, and everything that you want to see about structure mapping. You want to know, if price is actually moving upward or price is moving downward, like the price is in an uptrend, or if it's in a downtrend, or maybe it's in a phase of accumulation. Now, the kind of structure mapping I do, will pay more attention to price when it's already in a directional motion. That is to say, if it is heading upward or is heading downward. For consolidation, we already know what to do about it. Just find where the liquidity is, and after liquidity, market travels in the opposite direction when it is consolidating or accumulating. So we won't spend too much of time. We don't want to talk about that. So we want to see how it is when price is already directional. So when price is in an uptrend, what do we see? We see price forming highs, lows, highs, lows, highs, lows, just like that. And when it's in a downtrend, we see the opposite of this. The price forms a low, forms another high, and violates the initial low, respects the initial high, violates the initial low, respects the initial high, and violates the initial low. Now, how do we bring this SMC pattern into this? In SMC, there's something we call the break of structure, right? In SMC, there's something we call the break of structure. That is to say, when price violates a major structure low or a major structure high. Okay, in this place, a major structure low in a downtrend, we can call that a break of structure, right? That's what every person knows. And when price violates a major structure high in an uptrend, we call that a break of structure to the upside, and we can be expecting one break of structure here, right? After price does some level of mitigations down there and that. But if this is what everybody calls a break of structure, in smart money, I take it a step further. There are certain things that I see that will make a break of structure a valid one, a confirmed one, and those things are what I want to see: an inducement, right? I want to see actually an inducement. So look at this, the way price moves. So you can have price forming a high, a low, another high, another low, another high. Now, what is an inducement? When price comes back to take the recent structure low, right? Then we can call that an inducement, right? When price comes to take the recent structure low, that's when we have what? An inducement. Be it a sweep below it, that's in an uptrend now. If price sweeps below it, that's an inducement. If price breaks it and trades downward a bit, that's an inducement. Once price takes the recent structure low in an uptrend, we have what? An inducement. An inducement must be to the downside. Then the only time we can have break of structure is when price breaks the high that caused the inducement. Now, this is one thing many people don't know. They just see price violating any high or any low, and they call it a break of structure, expecting a continuation, right? You must have called this a break of structure initially. How come do you see a break of structure to the upside and price is coming to violate the lows that caused a break of structure, right? So, for this same reason, for this same reason, many people are not profitable, because they already call this a break of structure and they're already looking for buy opportunities around it, right? And for that reason, they get swept out of the market, and later on, market starts traveling their direction, and they get confused as to why market is doing that. But for a proper trader, for a proper SMC trader, we already know what price is intending to do. Now, this is what we call an actual break of structure. What happens after an inducement? Look, price can continue doing this. After the break of structure, we can have price travel downward a bit, ranging to come back into our internal structure range, maybe picks an order flow, so it mitigates another flow, picks another block, and what do we have? We have that induces again and runs back up. So when price begins to do some kind of funny movements like this, people actually get confused, but they don't know that this is what we as smart money traders, we look to see, right? These are things that we look to see. Someone else must have called this particular move that I just illustrated here One else must have called this particular move another break of structure. Why? Because price actually came down, mitigated, and traded higher. But he won't actually know that price just came to satisfy some liquidity, and you can still see something like this, and you get confused and you call this another break of structure to the downside, looking to sell, and before you know, price is actually violating what you're already calling a sell at this point. Because they see a break of structure here, they think that price will just come here, mitigate another block around such an area here. Maybe price come mitigate another block and continue to sell down. Why? Because they have seen a break of structure to the downside. Whereas that's not how it's actually done. A break of structure to the downside. This is no break of structure until we get an inducement. An inducement, which is this. That's price taking out the recent low. There was nothing to induce here. So price might have induced this initial low it formed. But for the fact that I didn't induce, came up, gave us another low, induced it, then we are looking for our entry either at any unmitigated order flow here. I'm going very, very fast, but it's very easy to understand if you follow up with all our videos. So price looks for an unmitigated order flow either here, if there is any at all, or maybe it looks for, if that is already mitigated by this, then it comes down here to look for the unmitigated order flow around here to continue the buy. And price is actually right if it continues the buy from here, because this is the only unmitigated order flow. So you can now begin to take your buy either from here, or if you have an unmitigated order flow here at this downside, then you can expect price to actually come down to mitigate the order flow, take out the other blocks and fair value gaps or whatever PDRA you have there, and continue back to the upside. So we have numerous examples of this kind of scenario playing out. Now you will best enjoy this thing when you do it on multiple time frame, right? You want to pick up a higher time frame structure and pick up a lower time frame structure as maybe your entry or your confirmations and all that. So I'm going to show you some examples. Look at this here. This is a trade I am actually anticipating on gold. I've been actually trading gold, but this a 4 hours trade I'm anticipating on gold. Now you look at this. Gold actually came on higher time frame. This was the inducement here, but there are other structures it's actually respecting here. Look at one inducement gold did here. It was an inducement on this major time frame telling us that okay, this is a strong low and it pushed high. So we could call this a break of structure after the inducement to the upside. That's a break of structure, we can call that. Now gold came after breaking this structure, gave us a proper inducement here, traveled low down to this place, fulfilled an order flow here, right? A major order flow. You can see how it's working very fine. Fulfilled a major order flow and started traveling up. But on its way down, it did some funny movements here. On its way down, it did some kind of structural arrangement here. So this pullback down, a pullback which became an inducement of this, a lower low, fulfilled order flow here. After fulfilling the order flow, give us a change of character around, taking out this high, coming here, broke structure to the upside. Look at this, broke a major high there. Now it is coming down. There are two things we can see here. There are two things we could anticipate here. Looking at this, it's either going to return back up straight from here, which is one possibility, of which once I see an entry opportunity, I could go for it. Or it does something like this. Or it does something like this and breaks to the downside, comes and tap this here, clearing out everything here as liquidity, right? Using this as inducement after the change of character here. Using that as inducement to run back to the upside. So when we trade smart money structure, there's a new paradigm. There's a way we do it. If we look at this, you see that this pattern I told you about is already playing out here, right? So this is a break of structure. This is an inducement running down. And we are expecting structure to come and get broken here. And there are two ways that could happen. See that price comes back and take out this whole low, using all these ones as inducements here, hitting back into this place and running back up, or price just continues going, following this structure high, low, breaking this structure, come back to induce, Look at the inducement here for this particular structure. So the inducement here for this particular internal structure. This was the inducement, internal structure inducement there. And the very valid order block for this movement is actually going to be this. Valid order block for this movement is actually going to be this, of which it has come close and it is actually running away from it. But what I am still anticipating is the mitigation of this order flow down here, this unmitigated, properly mitigated order flow down here for the buy running upward. So that's just that. Now, when you are looking at this structure mapping pattern, there are four things you want to pay attention to before I go into some other very much concise example. This an anticipation. I can go into some examples. There are a few things you want to pay attention to. Number one, you want to pay attention to, like I've talked about, break of structure. Number two, you want to pay attention to inducement. Number three, you want to pay attention to confirmed highs or low. So when does the high get confirmed? When does a high get confirmed? A high can only get confirmed after an inducement, and a low can only get confirmed after a break of structure. Right? A high is only confirmed after it has brought about an inducement. That becomes a major high. And the low is only confirmed after it has broken a structure that is in an uptrend. And the reverse case is for the downtrend. But for now, I'm dealing with uptrend. Maybe when I go to the next example, I'll look at downtrend. So looking at this, this becomes a confirmed high after this inducement, and this becomes a confirmed low afterwards, the break of structure. Now, this actually is not a break of structure. This is a false break of structure there. So you can't confirm this. You can't confirm this because as at this point, there's no inducement. So price comes up until goes there, gives an inducement, right? At this point where we have an inducement, this becomes what? A confirmed high. Then this we have, this is not a break of structure here, right? I was just only giving some examples here. So we can call this some liquidity sweep here. Just put that in, put that in, put that in. Can call this some liquidity sweep here. And the same thing actually happened here, some liquidity sweep until price approach the particular order blocks or order flow it wants to take. That's because price has the liberty to do anything between a major low and what a major high, anything it wants to do. So on this, after this gets broken, this becomes our what? Our major low, right? This becomes our major low. Now between these 2 points here, between these 2 points, price has the liberty to do anything it wants to do, and keep going higher, right? Until it gives us an inducement, and this becomes the major high after the inducement. Oh, sorry. I'm just doing some free teaching here. This becomes the major high afterwards. After this inducement. Inducement means that a recent high has been taken, and after the inducement, we can have price come all the way down to mitigate any stuff it wants to, any internal liquidity it wants to mitigate, any internal order block it wants to mitigate. We know how to check out, how to anticipate the block that price is coming to mitigate, right? Because price will actually go to the area where order flows are not completed. That's where price will go to mitigate. So price between this high and this low has the liberty to move any way it wants to move. It can move up, and the next time you see it's coming back down again. But once it breaks this low, then this low has been violated. We have that the trend is now suggesting a downtrend. But if it doesn't, it can come close. It can in some cases even sweep, right? Sweep it and what? Continue to the other direction. So we have scenarios of that playing out. Let me show you some I traded some time ago. But let me show you some examples here. Okay, so these are some of the trades that we are born out of, understanding structure mapping. Many trades were born out of that. So I'll give you an example. So I told you at the beginning of the video, knowing where to pick the market from, right? nowhere to hold the market from. So price on 4 hours was actually giving this down push, right? Critical down push is here, and you know, all the while it showed no mitigation of, sorry, no inducement of initial highs until that happened here, right? Price came out, took out the initial high it formed here. So this became our inducement. At inducement, we have a what? We have a strong low, right? This is still a downtrend anyway. So this is a strong low. In downtrends, we know that our strong lows get wiped out. All the strong lows get wiped out, and the strong highs are what? They are preserved. So after inducement, we have what? A strong low. This is the inducement. Then we have a strong low here. The price continues going up, got to a point where it wants to mitigate, most likely during other flows, right? Got to the point, some strong points close around in and around the other flow. And what do we get? Price begins to show us a change. How do I see a change? To know how to begin to anticipate movements to the downside, pullbacks. My last valid pullback here. My last valid pullback was compromised, right? Telling me that okay, other flow has actually shifted to the downside. And if I should run down to a 15 minutes time frame to show you what actually happened here, you see that a lot has happened. So let me just explain this 4 hours, and maybe in the next few minutes I can run down to the 15 minutes. So you can see this. So order flow was violated here, and that really suggests that okay, at this very high price, when you have violation of order flows, mostly on 4 hours, it really suggests that price wants to begin to go down. So we had, after that violation, we had some mitigations here that we could counterlize on all these weak rejections here on lower time frame. These are proper mitigations you could counterlize on. Yeah, you have even an inducement. I can see if you go down 15 minutes, you're going to see that inducement clearly. So for the sell, so we have this until price came down to break this this strong low here. Remember, this became a strong low because it induced a particular high, the recent high here. So price came and broke it down, and we became confident that the downtrend is continuing. But after price breaks this, then we have what? The strong high. The strong high is the highest point that price goes to after an inducement, right? The highest point that price goes to after an inducement is what? The strong high. And this tells you that this high is protected. Smart money, they are hiding here. All their losses, their stop losses are hiding here. Even the banks and institutions, they have their stop loss. As you see, they can run at loss if they trade in a very rogue manner, if they trade in an uncareful manner. So what happens here? They brought about this inducement to trick people into buying what? This market, right? And what do you see? They sold. So they gave some further buys here, to push price into a premium zone where they could sell from. And at this point, you begin to see them selling here. Look at their first move. They have this movement here shows their first presence in the market here for the sell. Their resumption for the sell here. This movement indicates it's a sponsored candle there. And they accumulated some positions around here. And you see that they have all their SLs here. And what do you see? At the end of the accumulation, a very big move to the downside, coming here to mitigate other flow, fill up more sell position. On that big move to the downside, the same thing, and it continues to repeat itself. So when they are done with this particular circle, because price moves in a circle, you have what? Inducement, major low, major high formation, break of structure, major high formation, right? It's just from inducement to inducement. So this is where the first circle started, and this is where it ended for the next circle to start. So inducement, major low, then break of structure, major high, price comes back into this range, mitigates what is left to be mitigated, forms an inducement, continues again, just a repetitive circle. So within this range here, as a trader, once price has given me what? An inducement, I know where it is actually going to return from around the next order flow. Once I see this, I now know how to counterlize on this and take so many sell trades, because why? I am in a downtrend, right? The price is actually moving downward, so I now know how to counterlize on this and take many down or many selling trades. So let me show you something on lower time frame. We have this on 30 minutes, and like I told you, on lower time frame we could counterlize on all these moves for the sell. Now if you look out on lower time frame, the price circle is actually the same. The price circle is actually the same. Not to forget that this is 4 hours major high after, and this is our 4 hours inducement. This is actually our 4 hours major low. So if you look at this properly, you're going to see a critical violation on our lower time frame. In fact, on 30 minutes, the violation started long ago, broke this low here, right? If it's on 15 minutes, would have even seen something very much more clear. But this suggests that price has actually changed its character, right? And price is actually interested in the sell side. It's actually interested in the sell side because on 15 minutes or maybe on this 30 minutes, this is a break of structure. Okay, sweep above structure and all that. So we have some break there, and this will be a change of character on lower time frame, indicating to us that price is ready for the sale. Now, where do we enter this trade from? The unmitigated POI here, right? Some unmitigated points on our POI. So looking at this other part of this week has been mitigated, right? So price may still come and trade above it. But the part that has not been mitigated is here, right? If you scale down to your lower time frame, you're going to see, I think you may find some other blocks here, some fair value gaps that you want to counterlize on. So for me, that's my go. If I'm to get a sell on this particular entry, I go in and around this area, stop loss above, and take profits either at this low, getting a 1:5, or I come to the next point that has not been mitigated, right? Order flow. Order flow was not properly mitigated here, or better still, this is the next unmitigated week that I am looking at. So I can have a nice entry here on the 4 hours, right? So this was it. This was it. So we have price form a low, a strong low on lower time frame, gave some movements, sweep, came, broke a structure there, and closed above, forming a strong high, coming to take out the strong low that was formed. This is actually a proper change of character to the downside, coming to mitigate the weak that was not mitigated here, right? And what do we have next? Either we take our first TP around this low here, right? And price does this, takes our TP around this low, or we stay until price gets to somewhere around here. So that's actually how to go about this. Now, looking at this, you could actually get some more entries. You would actually get some more sell entries in and around this region. Why? Because the price has actually swept to the downside here. Sweeping this low simply means that price wants to go higher, right? Price is interested in taking higher prices, higher liquidities. Now, looking at this, here's the highest point price will actually approach this other block here. This other block, from my other lectures, you know that this other block is a valid other block because it has a good fair value gap. It has every single criteria met. It has liquidities run away from it. It took out initial structure high and so many other criteria, or about 2 or 3 other criteria that I actually don't share. Let me remove this. This was my high time frame POI. So looking at this, I have a point of interest for the sale here, and you can see how price actually came back into my point of interest for the sale. And what do we see from our structure mapping? What do we see? Price is actually, after doing that, price is running down again. I usually like to go midway. Now you may be asking, why did I not use fair value gap here, and yet I'm using a fair value gap here? When I trade weak rejections, I don't use fair value gaps. I just go for the weak rejections that is not mitigated. Your mitigated weak rejections, that's one of my secret I just shared out. When you trade weak rejections, you actually don't use fair value gaps in many cases, except maybe you are scaling down to modify, right? If you are scaling down to actually refine your entries, then you can check on those weak rejections there on lower time frame, see the candles that forms there, and check if the candle has some fair value gap with it. So looking at this, if you start marking, you can call this a proper break of structure, right? This is where the break of structure became proper. Where is the lowest point after the break of structure? The lowest swing low after this break of structure. Sorry, the lowest swing high after this break of structure. The lowest swing high after this break of structure happens to be this. So this becomes our inducement, right? This becomes our inducement. But we know it very well that most of these places have not been mitigated in terms of order flow. You know, this is one major order flow, but within this order flow, there are still some other flows, such as this, some upward movement, right? So we know that when price is coming to mitigate, it's most likely to mitigate this particular order flow. Or if this order flow has been mitigated, then looking out for this, where is the next place I will want to take my sell positions, my sell entries? Well, all these places on 30 minutes has actually been mitigated. I would initially like to put my sell order around this block here. I don't know if price gets to it in the future times. Okay, price didn't get there before it started going down. But looking at this again, looking at this movement, price has actually come up until it's mitigated this block here, traded above it, right? Now we had the proper trade above this block with plenty rejections. The weak rejections always call our attention as smart money traders. After those weak rejections, what do we see? A nice change in character here. After a change in character, what are we anticipating? We're anticipating anything that has not been mitigated. And this happens to be our number one target that has not been mitigated. Getting there, running downward. Who else is not mitigated? This happens to be our number two target that has not been mitigated. So we can actually take trades from these unmitigated weak rejections. Otherwise, we go down to our lower time frame and check what is actually there sponsoring that on mitigation there. So we can always take trades in those regions. So that's how we actually go about taking our trades there. This would have given us another very, very, very nice trades. The downside, remember, we are following our 4 hour structure. We are not doing it ahead of our 4 hour structure. Looking at all this, we are just counteralizing on our 4 hour structure here. So after this break of structure on 4 hours, do we take more trades? We could just relax our minds, right? We could relax our minds and find out where trades, where the market will actually be coming to on the 4 hours. Otherwise, we keep marking out some 4 hours points of interest, such as this. We'll mark 4 hours points of interest, such as this also. Now we can go and refine on the 4 hours. Sorry, on the lower time frame, 30 minutes. I would like 15 minutes best, but because of some restrictions, we can't get there. Okay, so this happens to be our, our markup there. So we can actually refine this based on order flow, right? Based on order flow. Here is the last upward movement based on our order flow. So we can actually refine this was the last upward movement before price started coming down. Price didn't take this down, didn't take any up. All these ones are just inside bar. So if I'm to refine this based on order flow, I will still refine and I will still want to keep it here, right? Price didn't approach that. We had some other structure break to the downside, right? Okay, so I think order flow has been violated here again. Returning back down, this became the last upward movements that has not been mitigated, right? So we are talking about order flow. So we could get some trades from here. This is our order flow. Inside our order flow, this is our order block. After our order block, this happens to be our fair value gap. Zoom in some more. Zoom in some more. So this happens to be our tiny fair value gaps here. Happens to be our valid order block there. Okay, so take out the order flow. Yeah. So we have another entry here, right? And you can see how this entry respects to the downside. So if I should take this entry here, we do a fair value gap. my entry, a little above the high, other block high. That's my stop loss and the range low, other block of the range low, because markets can actually do anything funny. Or you can take it down to the lowest low there. So looking at this, also have another sweet trade entry there. Now at the point where price comes back to mitigate on our 4 hours, right? This is the first proper mitigation. Sorry, this is first proper sweep we are having here, which is our what? Our inducement. Every other time we didn't get any proper sweep on high time frame. These are 4 hours inducement. After price takes our 4 hours inducement, we know that price is interested in going back down, right? So looking at this, where is the particular place price should mitigate after the inducement? Other block. This fair value gap is very large. Oh no. Right, okay. Strong high there. So if you are to take a sell trade, it's just all about risk management, risking a particular percentage of your account. Okay. Stop loss above there and take profits down, 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 right? So this is a full swing and you're still getting 1:8, and your risk is just some about 25 pips of risk there to catch some 200 pips plus 225 pips in this particular one. Yeah, how many pips we have as our risk? 11 pips, 13.9 pips, sorry. We have 122 pips here as our profit target in this particular one. There are many other ones I didn't take here, like this one should have been actually mad. The risk reward ratio around here would have actually been so mad, right? So you have some 1:15, right? And that's how I do my trade. 1:15. Here we have some 1:8.5. We have some 1:9.9. That's already 1:10. So little risk, 14 pips of risk here. Little risk, 15 pips of risk. Little risk, 14 pips of risk there. Good reward, 145 pips. So just like that and like that, understanding price cycle matters a lot. What's the summary of price cycle? Hey, when price is in an uptrend, you have what? Price forming highs and lows. These are not higher highs and higher lows yet. They're not higher highs and higher lows until you have that price what takes out the last low it formed in an uptrend. Then you call that inducement, right? At the point where price gives an inducement, what do we have? We can now say, okay, we have a major high. We have a major high, right? We have a major high. Now, price after an inducement can return immediately to go and break structure again, or price can just mitigate and decide to travel a bit lower into the previous structure, right? Into internal structure to travel, go deeper into internal structure, and then find something to reverse it. At that point where it reverses, right? We keep seeing these are fractal movements here, lower time frame structures, internal structure. This is where we have what? A break of structure when a strong high has been what? Has been violated. When a strong high has been violated in an uptrend or a major high as you call it, whichever way, a major high has been violated, you have a what? A break of structure. Break of structure. It's at the point where you have break of structure that you can now say, okay, the lowest point price got to after the inducement is what we call what? Our major low, right? That's where we can tag as our major low. The lowest point price attained after our inducement. This was our inducement. This is the lowest point price attained after our inducement. And that's called what? The major low. Now, price has the right to do what? To keep going, forming more ranges. Range structure, keep going high. But at any point, once price gives an inducement, right? Sorry. Once price gives an inducement, then a particular circle has actually ended, right? So this circle that started from here has ended here. A new circle is actually starting from here. Now the trading range for this circle is what? Between this high and this low, this strong low, between this major high that has formed an inducement and this major low that has broken structure. So the price can actually free will and give you something like this. Come and break this initial high that it created. It's not possible, it's not compulsory price comes down. When price does that, we know that internal range liquidity has been taken. Actually not a problem. It can do that. It can even form few more highs without compromising the major high. Because if it does that, then we have a break of structure. It can sweep the major high and decide to still come back down. Well, that's some possibilities there. When you come to our DM, you come to our mentorship, we can teach you about all this properly. So price gets to this major low, you can sweep it, it can respect it without sweeping. If it sweeps, we want to see it close above and continue to the upside. We have some change of characters. I hardly mentioned anything about change of characters today. So we will leave that for some other videos. So I'm still going to solidify this concept next week Wednesday. Do well to stick around and be with us as we learn together how to be profitable. We have so many traders here, so many people that are learning from us and they are actually becoming profitable. Very soon we are going to be sharing up our testimonies of how more traders, some traders have come here and how they have learned from us and how their trading is improved. So I remain your humble forex mentor, FX Josh, and we remain pitch trading floor Yenegua Bayelsa State. And we look to see you. Please subscribe, like, share, and drop some comments for this video and other videos. Anticipate more. We have more to share. Thank you.